Hey folks, welcome to today's live stream. Today we're going to talk about Bitcoin and rather how Bitcoin has fooled us all. Well, not really, but I do want to point out the important pivots that actually defined this downward move. Where should we have stopped out of our positions is the question we need to be asking, all right? And I made a huge mistake personally. I set all my stops in Bitcoin value instead of USDT value. So whereas I had actually did stop out of a lot of my altcoin trades around this location for this downward leg, I just stopped out to Bitcoin value, and well, I lost quite a bit in USD value because I wasn't awake to tether out of these positions, or rather the Bitcoin positions, right? So initially, around this location, I said, we need to expect some longer term mean reversion, and we need to trend back down to the weekly 200 moving average, okay? Then, obviously, we had an upward break, and I said, well, you can use 50% of your portfolio to trade this lateral range. Then, we had ourselves an upward break at this location. This was very interesting because we had two ways of defining trend for this area. And the title of the video is, how could you have caught this new downward move? Well, I'm going to point it out to you, right? First off, we crossed this pivot right here. If this pivot gets crossed, we revert to the center of data for the relative mean. And the same is true for this pivot right here. So our initial reaction for when we re-enter this pivot is we would get lateral trading and an upward trend as defined by the top edge of the 295 band. In fact, we did get that lateral movement with a slow upward slope, right? And we expected that 90 moving average to retrace upward to meet price, okay? While the price managed to trade laterally, okay? Then, after a significant period of compression for the 90 period, it would be provided with the opportunity to either expand upwards or downwards. At least in the short term, I had expected an upward expansion. Now, as soon as this pivot right here was crossed, this downward bump right here, we retested our resistance levels for this downward move, and then we began our mean reversion to the 295 mean, right? Since if your 295 period was defining trend and you re-enter the 295 band, price is liable to retrace to the 295 moving average. You will also notice that's the exact value we found support, the bottom edge of the 295 band. Why? Because it would define a new realm of expansion for a downward trend, which we have now established. Okay? So, initially, we used the top edge of the 295 band to define trend. When we broke it, we expected reversion to the 295 mean. Price broke below the 295 mean, and it implied lateral trading as defined by the 295 band. And that is exactly what we did. We traded laterally as defined. The upward break did fail because it was not able to sustain the upward movement. So, when the new downward expansion ended up beginning, we did see some high price volatility at that key pivot for the beginning of a new trend. Now, of course, we also need to define the new period that's going to create the edges of our new downward trend. And for now, I have it set as 90, it's 80, that's going to be close enough for the moment. So this right here is going to define our downward trend, the bottom edge of the 90 band, okay? So we are in a downtrend for Bitcoin, okay? If we do see some lateral trading, we will probably go right up to the edge. If we do return inside, there will be a quick volatility pop to the upside for continuation of trend, okay? You can see it in this location as well. Oops. Let's actually point this out, okay? So here, our longest overexpanded period was also 90. So for the first leg of this upward move, oops, for the first leg of this upward move, right, where the 90 period is overexpanded, we have the initial reactionary upward burst because there's low volatility overhead in that section. Then we retrace to the pivot that will sustain the trend, the edge of the 290. And that defines trend as it continues. Now, you'll notice it breaks through this section, and you might ask yourself, well, why is it doing that? Well, it's because the period has changed, right? Now it's going to be defined by the 150. You'll notice that if I change this 90 band to a 150 band, that will actually define the trend in that location. So if we change this to 150, guess what's going to happen? Now, for the area where the 150 period is overexpanded, price finds support on the top edge of the 150 band. Okay? That's just beautiful. Now, guess what happens next? After the next leg up, guess what the next overexpanded period is? 295, right? And then that's what I have this purple band set as. So initially, we find support on the 90 band before continuing our trend, then the 150 band before continuing our trend, then the 295 band before continuing our trend. So as mass continued to expand, that adaptive price level continuously provided support. And I'm actually going to load up our adaptive moving average band so that we can see how exactly it adjusts to match those values. And this will take a second to load because it is a rather large indicator. In the meantime, I am going to pull up the comments on YouTube, so just give me 1 second here. Price level continuously provided. Feedback. Perfect. Yeah, that is taking a while. Okay, well, we're just going to sit here and wait. And I forgot to get a glass of water, so I guess I'll be right back. Hold on a second. It appears we have loaded. Excellent. You'll notice that the adaptive MA does provide very significant support as the MA changes to match the best level of support. Okay? As soon as we break through, we do see that mean reversion. And guess what happens? As soon as we touch that mean and we do have the downward break, well, this is actually why I decided to say tether out at this location, because it implied lateral trading to the bottom edge of the band. And guess where that was? That was at 3,400. Okay? So at this location, that's why I believed tethering was the best option for that relative downward move. Now, if we pop ourselves a little bit over to the right, we're actually retesting that value right now, and we are actually now defined in a sufficiently compressed downward expansion. And guess what that means? This downward trend can be defined by that pivot, right? So, just like we had this here, I am going to predict that we're going to have this here. And this trend will be intact as long as that value is protected. Now, I am interested in seeing the 3.2 standard deviation, right? Because you might say, oh, well, we're in a downtrend. It's probably going to continue that downtrend for quite some time. So what I'm going to do is, hopefully I have this preset loaded for me. 53.2. Perfect. All right, yeah, we are. Okay, so fun fact, we are tagging the 3.2 standard deviation. That does imply a brief upward move, right? Because the 3.2 standard deviation can act as a bit of a brick wall since it is above 99.7% of the data. So with that in mind, what we're seeing here is likely just to move laterally for the time being. However, it's very important to tell if we're seeing any kind of net expansion. And there is one last final bit I did need to point out. right? Our 14 period CCI is rolling up. That does imply reversion to the 14 moving average. So probably just going to see some lateral moves. It's going to be a quiet day, I hope, for Bitcoin. Of course, because of the strength of this selling, it could just be that we're going to be pushed straight back down to the weekly 200 moving average. That's quite attractive, right? We have reverted to our longest overexpanded period, had a nice bounce, and continuing down our retracement where we're just going to bounce along for a moment. That is very nice. You know, I should have done this beforehand. Shoot. Yeah, I was going to pull up a YouTube video that I did about 2 weeks ago when we were directly on top of the weekly moving average. But I guess I can just redraw it right now, and then I can compare them at a later time. So we're going to change this back to my basic settings, 51.25 and 201.25, okay? That doesn't look right. Oh, there it is, okay. So here we are on the 4-hour chart. Yeah, retesting the weekly 200 is a pretty good idea. And I would like to do this from the daily perspective, if you don't mind. Beautiful. So, remember, the 250 period was our defining pivot for the continued expansion of Bitcoin, right? So as long as that was around 4,500, I'm not going to change it because that setting would take a minute. What the hell? 1 second. My prediction from 2 weeks ago, well, let's just go over it. Change this back to custom. I'm going to change this to 250, and then we're only going to have that visible. Actually, let's put this on a 50 so we can have a good explanation for short-term distributional compression, right? Okay, so because the 200 band is overexpanded, right, or rather the 250 band is overexpanded, we know that the 1.25 standard deviation, the pivot point for expansion or compression of a distribution, is going to act as the pivot for mean reversion. So if we do cross that 4,500 value, it would imply a retrace up to 6,000. And that's exactly why I figured it would be such a strong resistance, because that implication would be very bullish, and well, I don't have a very bullish sentiment right now, or neither does much of the market. So with that in mind, nothing can expand downward continuously forever, right? We had this first downward leg, we had very low volatility overhead, and we had net expansion on the wave PM, which implied a very strong sustainable move, and that's exactly what we got. So when the 1.25 standard deviation of the 50 band is crossed, the 50 band will have the opportunity to sufficiently compress to allow for a new expansion one direction or another. Now, remember guys, I do need to load up the weekly 200 moving average, so we're just going to snap that on there. If we load up 1400 on the daily chart, that is going to be our weekly 200, right? So, do you guys remember my prediction? What I said was, after, and that was around on the exact weekly 200 moving average, I made this prediction, we would have an upward bounce, retest the top edge of the longest, most overexpanded period before a further rejection to the weekly 200, and then we would have several slower, smaller bounces while we define support on the institutional benchmark, which will give time for the longest overexpanded period to reach down and initially meet price to provide resistance once more, and then it will encompass price. So price will be able to go inside that band, and as soon as that is inside the band, it will give this distribution the opportunity to compress, while all the while being on top of the institutional benchmark of the weekly 200. So this lateral trading, this compression, will then be defined inside the 200 band. Then, when price does in fact break up above the top edge of the 200 band at this location, that will define the new upward expansion of the next bull run. Okay? That's how it works. That's volatility theory for you. So if we look at the previous crash pattern, we're going to see the exact same thing. Okay? I hope you guys are ready. So we ran into the band here, we retraced to the relative mean and trade laterally as defined by that period. There is a downward break from the period, which causes a downward expansion to the institutional benchmark of the weekly 200. So what happens then? We retrace upward and test the longest overexpanded period's pivot point, in which case we are rejection back down to the weekly 200. But guess what, guys? We trade laterally as defined by the 50 band, which is interesting. I'm not sure how relevant that may be. Right? Because it's not well, it is technically an overexpanded value. Hold on. Okay, for this relative downward move, yeah, it's the 80 period. So if we change that to an 80 band, we'll actually get a pretty cool picture here. One second. You'll notice we retrace exactly to the 80 moving average, and I'm guessing that, but it's pretty reliable, so hold on to your panties. Beautiful. Okay, that's nice. Yeah, that wick does retrace back up to the 80. That's cool. So, again, we can literally touch that benchmark, retest it from below, and then back down to the weekly 200. Lateral trading, and then we re-enter the 200 band. It is implied, or the 250 band, excuse me. It is implied that we will trade laterally as defined by the 250 band, right? And then, because the 80 period is overexpanded in the short term, we trade laterally as defined by the 80 period as well. So that's that resistance pivot for us. Then, when the most overexpanded period has an upward expansion, it does so to the top edge of the compressing period and then trades laterally as defined by that period, right? Then, as soon as we see our upward expansion, that's when we begin the next bull run for Bitcoin. Why? Because there's very low volatility overhead, and low volatility overhead means upward expansion is very easy for Bitcoin, right? So that's what we need to see on Bitcoin's current price, right? And it's going to take a while, guys. It's going to be at least half a year before this actually, becomes a bullish chart. That's really important to understand. This distribution needs to fully compress. And it's going to happen something like this, okay? Then price is just going to trade laterally. When it re-enters the band, it will be defined by the band and just go sideways, 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 sideways until there's an upward break. I'm going to say around mid-July, okay? So that is going to define the uptrend for Bitcoin. Now, you must excuse me for not being able to catch the everyday intricacies of this lateral trade during this period of compression. Right, guys? If for some reason it seems like my Bitcoin predictions have been inaccurate this week, that's because I'm primarily concerned about the macro timeframes. And if we're getting short-term compression, we're going to get lateral trading as defined by these shorter-term periods. And really, every time that has an upward break or a downward break, well, we're still going to be defined by this overexpanded period. And we're still going to be defined by that weekly 200 moving average. And it does feel worth for me to say that if we do, in fact, see a downward expansion below the weekly 200 moving average, okay, well, then it's no man's land, right? Because we're getting new downward expansions. And we do trade laterally as defined by the longest overexpanded period. And guess what that means? Well, trading laterally by the longest overexpanded period would imply that price is down to negative 2,000 or possible, at least theoretically. Of course, that wouldn't happen, but lateral trading as defined by the band is the soft rule. Again, that's only going to happen if we do break the weekly 50 moving average, or weekly 200, excuse me. All right. Going to dive into the comments here and see how we're doing. Hi, Zexam. Hi, Pen. Welcome to the live stream. Lucian, hello. Michael says, excellent points and follows the strat perfectly. However, hindsight is always 20/20. What advice can you give us to help see this stuff in the present moment more clearly? It seems as simple as just honoring the bands when price returns to them and methodically changing your perspective and trust the reversions will happen. Is it that simple, or is there another strat, psychological, to help us trust in the strat? It's you have to have very little emotional and mental commitment to what you're doing. Right? And what I mean by that is once the pivots change, respect the pivots. Once the information happens, okay, good. It changes the conditions and you'll have no prior engagements. A lot of people I've noticed have favorite coins. And, well, having favorites isn't really nice because conditions change that will prevent it from being your favorite anymore, right? So let's say a coin did something to make it your favorite. Well, let's say the market condition changes. Well, it should no longer be your favorite anymore because it's no longer providing a reliable set of signals for you. Really, it's a good question, Michael. Yeah, you just have to be constantly adaptive and not hold any favorite opinions. Okay? Right? We did have this bullish break up here, but as soon as this pivot was crossed, it turned into a bearish move. And I am still hurting that I did Bitcoin stops instead of USDT stops. Well, because my USD value is about 10% down right now. Beautiful. Cairo says there was a wave PM cross on the daily for the USD CHF on December 27th. If I'm correct, did I get it right? And does that imply downward bias? Okay, I don't think that means what you think it means, but we'll check it out. 1 second. There are no wave PM crosses as defined by the 4-hour. If you go to the daily chart, there's no wave PM crosses as defined by this chart. We'll check the weekly as well. One moment. Okay, I'm going to assume you're talking about this here, this 14-period CCI downward expansion. We're just waiting for the wave PM to actually load, and it timed out, so give it 1 second. No, there really wasn't any wave PM crosses made, I'm sorry. Yeah, that's just about it. I am going to go over Ethereum as well. I'm sorry, Cairo, I'm not saying what you saw. But we will look at FBTC and FUSD because there's an interesting note a Cat with Charts did pick out that I do want to touch on. Okay? So, the importance of pivots. How did I find this period? I have it set to 250. This band was... this new overexpansion, about 250. Yeah, it's 250. Nice. So, guess what happens, my friends? We do initially find support on the 250 band. That was a very bullish scenario. It implied trend continuation. And as soon as that broke, where we dipped down right here, it implied the trend was over. Do you know what's implied now, folks? Reversion down to 3,000 or 31,500. Okay? I might even just call a short on this. Okay? If you layer... Okay, this is going to be hard to define because you're going to need to layer shorts in quite a large range to actually make this a viable position. You're going to need to layer shorts from this location to the top edge of this band. So from 35 to 37, your stop loss is just going to be above the top edge of there. and your take profit is going to be the 250 moving average. All right. So if price does trickle upward, you'll get shorts filling. If it pops up above here, you should stop out of the position. But it's more than likely price needs to trend back down towards that 250 moving average. Now, if you want your highest probability entry signal, you should wait for a 25 period CCI to roll up and then down. That's going to be your best short entry, and I am going to be looking for that signal. And at this location, I do want to point something interesting out, okay? We're going to double up this chart layout so I can go ahead and compare it to the USD pair. What a fun perspective. Okay? We're going to look at ETH USD. Ah, shoot. ETH BTC. I need to desync chart layouts. 1 second. Okay. On this side, we do ETH USD. Beautiful. So there's a very interesting point on this particular chart. What was I looking for? I didn't have to go to the 1 hour. Excuse me. Quite the nuisance down here. Nothing loads the way I want it to. Come on. Damn it. Okay, this is more trouble than it's worth. Actually, this might help us just a touch. 1 second. If we look at the 90 period over here, what would happen? Oh my god. Of course. Of course. Okay, so on the USD pairing, because we re-entered the 90 period, we reverted to the 90 moving average. And now we will trade laterally as defined by that period. Ah, shit. Okay. Well, I didn't check the resistance on the USD pairing. That's my fault. Right? Because, yes, we did have this defined trend on the BTC pairing. This is why we failed. Because we had that strong resistance at this level. And you can even see the highest price volatility that coincides with it. God damn. That's really clean. Okay, well, the more you know. Even I might make mistakes, people. This is one of them. It's a pretty good reason, too. I'm actually kind of impressed by it. However, well, at least now on Ethereum, on the Bitcoin pairing, you do have good short entries down to that 250 moving average. So if you want to swap that around to a short, you would be more than welcome to. Okay. That's going to be it for today's live stream. I hope today was educational. I am very hungry. All I had for breakfast was a protein bar, and I am going to eat food. See ya. Oh, you need to like the video. Do that for me. Like this video, and I will release a trade call today. That's the deal. See you, folks. Have a good one.